Hello everyone, this is the pre-market report video for today 16th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. In the last pre-market, we discussed in detail about Reliance Industries quarterly results, HCL quarterly results and India's September month consumer inflation. So in response to those released data, yesterday Reliance Industries was down over 2% and HCL Tech managed to close positive despite the profit booking pressure in the IT sector. Then about the bad consumer inflation data, I thought that will influence most on FMCG and banking stocks. But there is another very important sector that heavily dependent on the rate cut is auto. Since in India, most of the customers who purchase vehicle, they purchase it through the bank loan. Now reducing the interest rate will directly affect that. Thus yesterday, auto sector was the second major dragger down 0.8%. Hence, I'm telling this to myself and to viewers, always we need to remember interest rate decision, otherwise consumer inflation data will have a direct influence on the auto stocks. Back to the topic, yesterday the major dragger was metal stocks. It was down 1.4% as the Chinese stimulus package was not as big as expected, which in turn reduced the metal prices in the international market and so dragged down the metal stocks. So sector-wise, 8 out of 13 major sectors were down. From this perspective, it looks like yesterday's market was bad, but in overall market, that was not the case. 50% of stocks advanced, 4% was unchanged, and 46% was declined. Hence, yesterday, more number of stocks increased compared to the stocks that was declined. Institution-wise, in cash market, for the 12th session in a row, FII was net sellers. They did net sold for 1,750 crore rupees and DI net bought for 1,650 crore rupees. Just for info, this FII selling NSE data is roughly matching with the NSDL FII's data. Hence, based on both the statistics, so far this month, roughly FII net sold for 60,000 crore rupees. Then in the derivative market, as it is, yesterday it looks like FII did the heavy shopping, like net bought for 36,000 crore rupees. But in actual, for the entire 36,000 crore rupees, they net bought the Nifty, and on top of that, at present, they hardly have any Nifty open interest, which means they net bought Nifty for the yesterday's expiry. So we should not take any decision based on this net index option by value, and these are my quick takeaway from yesterday's Indian market. Now moving to US, their market opened flat. However, after the opening, ASML, a semiconductor company, released the result, which was not good, and that stock was down by 16% because it was the chip company which influenced Nvidia to fall 4%, AMD fell 5%, so the other tech stocks was also down. Then about oil, it appears there is no oil supply disruption in Iran due to its escalation with Israel, as there was a news that Israel won't be targeting oil and nuclear power plant, which in turn crashed the oil by another around 4%. At the time of this video, WTI crude trading around $71 per barrel and Brent crude trading at $74.5 per barrel. Again, this oil price crash pushed down all the US oil related stocks. Hence, all three US major index last night closed negative. Dow Jones fell 0.75%, S&P 500 was down by 0.76% and Nasdaq was decreased by 0.98%. In case of VIX, only one day on Monday night, it dropped below 20, but again last night it increased to above 20. Here, I like to add one more thing. Though last night US market was negative, banking stocks continuing to post better earnings results. I mean, both Goldman Sachs and Bank of America's earnings was good and it did beat the analyst estimation. Hence, those banking stocks in US alone increased as a result of good quarterly results. Then regarding Indian ADR, other than ICICI Bank, all others closed significantly negative. Especially Infosys in Indian market, it closed positive, but in ADR, it dropped near 1.5%. Hence, it's the fresh price action. Whereas in Wipro case, in both Indian market and in ADR, both places it dropped around 3%. So Wipro case, it appears no issue. But we can't be sure since as we discussed last night, US got the tech stock issue. Anyway, banking stock wise, both ICICI Bank ADR and HDFC Bank ADR got negative arbitrage of 1 to 2%. Similarly, Reliance GDR also got around 1% negative. Hence, overall, all major ADRs indicating the negative trade. Gift Nifty wise, early morning today at 3 am, it closed at 25,054, equating it with the spot market. For now, it's indicating 50 to 70 points gap down opening. So these were the things happened last night in the dollar market. In the Indian market related info, I like to talk about the Hyundai IPO. Yesterday I did the valuation and the valuation comes around 1.3 lakh crore rupees to 1.6 lakh crore rupees, and at present they are offering the IPO for the upper range 1.6 lakh crore rupees. Hence, the IPO offer price is not crazy overvalued. However, as I said, they valued it's in the upper range and in line with the present calendar year auto sector rally. So I will genuinely consider to invest in this stock if the market cap dropped below 1.2 lakh crore rupees means. But there is one thing I can say, if anybody who might buy or consider buying Maruti Suzuki at the present price level, they might consider Hyundai IPO. Since they valued in line with Maruti Suzuki, but Hyundai got the better margin. Disclaimer, not the recommendation, just explaining for educational purpose. Hence, I don't think this stock will have a listing gain of 10 to 20% like the recent other IPOs. Suppose if the share price dropped like Paytm and LIC, then I think we might consider this. Hope I'm not confusing. For the moment, the IPO is subscribed up to 18% and the grey market premium is just around 2%, not much. Anyway, as a summary, apart from banking stocks, it looks like other earnings were not good. Hence, US market closed negative. Then Indian ADR indicating the further downside and Gift Nifty also indicating 50 to 80 points gap down opening. So it's really tricky now whether today Nifty will close above 25,000 or not. Then as per stock open interest, Bandhan Bank, Reliance Industries, Cipla, Bajaj Auto, Axis Bank and Sun TV got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Deepak Nitrite, PVR Inox, Page Industries, Hindustan Petroleum, Coforge and About India got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, Bajaj Auto, L&T Tech, Aditya Birla, South Indian Bank and CRISIL Rating are some of the major Indian companies' earnings results are scheduled to release today. In terms of macro, as far as I know, it's only UK consumer inflation data released at 11:30 am that we need to look out today. Coming to technical, Nifty opened 60 points gap up and reached 25,200 mark. However, it failed to sustain but managed to close above 25,000 mark. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with continuing the higher high formation, and also it managed to close marginally above 50-day exponential moving average. Those were positives. And on the negative side, increased selling pressure at higher level. Hence, a fall below this 25,000 mark could increase the weakness with the possibility of Nifty dropping below 24,900. If Nifty falls below 24,900, it might trigger a further correction towards 24,700. On the higher side, the resistance is seen at 25,200. Then in case of Bank Nifty, it opened 160 points gap up and continued to outperform Nifty. Despite volatility, it did sustained above 50-day exponential moving average but still closed below 52,000. Thus on the daily chart, Bank Nifty formed a bearish candlestick pattern with minor upper and long lower shadow. Here, long lower shadow indicates the buying interest at lower level. Hence now Bank Nifty has to hold above 51,650 zone for a bounce towards 52,350, then 52,500 zone, while on the downside support is seen at 51,650 and then at 51,500 level. As per the weekly options data, the maximum call option open interest was at 25,200 strike, followed by 26,000, 25,500 and 25,100, with maximum new call option writing at 25,200 strike and then 25,100 25,100 and 25,500. On the put side, the maximum open interest was at 25,000 strike, followed by 24,500 and 24,900, with maximum new put option writing at 24,500 strike, followed by 24,400 and 25,200. Thus, from options data, it indicates that 25,200 is the key resistance zone with support at 25,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.